The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Welcome back to AusBiz on this Wednesday. I'm Andrew Gagan. Good you can join us as we get across the open. Let's take a look at what happened overnight. Global stocks mostly higher. European stocks, they moved into positive territories. Investors were buoyed by easing Eurozone inflation, potentially paving the way for further rate cuts there. Investors on Wall Street are focused on positive jobs data in the absence of any significant developments on the trade and tariff front. All major indices gaining, with mega-cap tech stocks doing the heavy lifting, led by Nvidia. Chipmaker Broadcom hitting a fresh record high after the company said it had begun to ship its latest networking chip. And Shells and Wells Fargo were trading higher after the US Federal Reserve announced that it will no longer have to operate under a $1.95 trillion asset cap imposed from 2018. Dollar General shares, they surged after the discount retailer raised its annual sales forecast. And Pinterest rose after JP Morgan raised the stock to overweight. So let's take a look at where we're starting. It's flat at the moment, but SPI futures are up around 0.25%. So we'll see how that pans out in early trade. Now, speaking of international trade, in fact, Australia and European Union are set to re-intensify negotiations over a trade deal, reflecting growing determination on both sides to secure a trade agreement in response to President Trump's trade war. Don Farrell, the trade minister, will meet his EU counterparts during an OECD meeting in Paris this week. EU Commission President Ursula von der Leyen is also said to be contemplating a trip to Australia later this winter if the negotiations prove successful. Australia and the EU had launched negotiations for a free trade agreement back in 2018, with two-way trade of goods and services representing some $97 billion in FY22. Catching up with the latest macro data, US job openings increasing in April, but retrenchments increasing at the same time. A sign perhaps of a slowing labour market there. Openings rising 191,000 to close to 7.4 million. And in other data, US factory orders dropped sharply in April, falling 3.7%, with commercial aircraft orders plunging by more than 50%. Meanwhile, the Trump administration reportedly wants countries to provide their best offer on trade negotiations by tonight, our time. This comes as he signs a directive to double steel and aluminium tariffs to 50%. Well, the longer-dated US Treasury yields did dip initially as investors awaited updates on tariff talk and budget negotiations. The 10 years at around 4.45 and the 2-year yield at close to 3.97%. The US dollar rebounding from a 6-week low against the euro, as Eurozone CPI data in May fell to 1.9% year on year, with the core inflation rate falling from 2.7 to 2.3%. And the Aussie is trading currently 64.6 US cents. All right, well, let's get across what we're seeing on the charts now. To do that, we're joined by David Scutt from StoneX. Scutty, welcome back. Good to see you on this Wednesday. And you take a look, particularly what we're seeing in the US at the moment. Investors continuing to find positives, aren't they? Particularly in the light of what we've seen economically, but also those in the wake of those company earnings.
Good, Andrew. Great to be back. And you're right. I'll probably use the term cherry picking. At the moment, we're clearly in a bull market. Every excuse to go and buy is being bought. Now, last night it was the job openings, a surprise increase. But it wasn't really surprising because we hadn't seen 3 consecutive declines coming through since the middle of 2023. So the fact that we had an increase should not have been a surprise, but it was a surprise. And that was the catalyst on this occasion to go and buy the dip. And that's been a continuous theme, whether you're talking about trade headlines, whether you're talking about Fed rate cut hopes, there's always something dangling out in the front to entice buyers in at the moment.
Now, there's been a lot of focus on the US dollar. Obviously, that's been that downtrend. A little, as I mentioned there, did rebound a little last night. What are you seeing there? Particularly, I guess, the Swiss franc has been the greatest beneficiary there.
Yeah, the Swiss franc, like the watches, you can go and buy Swiss watches, obviously known for their reliability. I've got to say, when it comes to the actual dollar Swiss pair, it's incredibly reliable when it comes to signals at the moment. So what we've seen, Andrew, looking at the chart here, that it'd been calling up in a falling wedge for quite a period of time, which is basically a pattern that warns about a potential reversal at some point. And then yesterday, we saw the price go and test downtrend support, bounced really strongly, and then went back above 82 and then broke that wedge resistance level. And you can see now it's basically outside that wedge. Now, if you can go and clear 82.46 today, that's going to be a very bullish indicator and lead to some potential upside coming through in that pair. The momentum story is still very much negative, but it looks to be ebbing as well. So no great strengthening coming through. Indeed, it's starting to go and weaken at this point. I wouldn't be looking for anything more, mate, than potentially a squeeze higher, maybe to 83.33, because it's still very much a sell on rallies play over the longer term.
All right. Now, Scutty, that weaker US dollar has certainly been beneficial for gold. What I've assisted those silver, it's certainly lagged, hasn't it?
It has, mate, and it's been a really bad lagger indicator as well, because so many people have been looking at this and saying, well, if gold is flying, why isn't silver doing it as well? And it's frustrated the bulls on so many occasions, and potentially on this occasion as well. But we have seen some pretty constructive price action there. So looking at the charts, what you can see there is that the price has been calling in an ascending triangle for a substantial period of time. We're talking about months, not weeks. And then on Monday, following that drone attack from Ukraine on Russian aircraft in particular, got a lot of attention. We saw this massive gain coming through. It was the largest increase we saw on a daily basis this year. And it took out a couple of levels of resistance and then balked right at the key level, which is 34.87, which is the high that was set back in October last year. And then overnight, we saw a big pullback, particularly in Asia. It really reversed hard, but then we saw another massive bounce coming through. And I've just signaled that with that red arrow there on your screen. And to me, there's not going to be many better opportunities now for the silver bulls to go and take action and break silver to multi-decade highs than right now. So 34.87 is the key level on the upside. Momentum is all in the favor of the bulls at the moment. RSI 14 is trending higher. MACD is giving bullish signals as well, but it has to go and clear 34.87 to go and bring more people in. If that happens, then look for a potential move to 35.36, which was the highest level set back in late 2012, and then beyond that 37.46. But to me, at the moment, all the price action at this point in time is just going to the upside. Momentum is swinging to behind it as well. So I'm feeling pretty bullish about silver and looking to go and buy dips and bullish breaks.
Scotty, let's take a look at iron ore. Particularly, I guess, we've just had that latest factory activity in China, which missed expectations. What are you seeing in iron ore at the moment?
Very contrasting to what we've seen in silver and gold, Andrew. It's been pretty ugly on the charts. And when you go and look at the other story, whether you're looking at a longer term or a shorter term, it just looks ugly. So let's look at the longer term picture first. We've got the 200-day moving average trending lower, the 50-day moving average trending lower as well. Prices in a downtrend. And then nearer term, what you can see, there was a rising wedge, which is a bearish continuation pattern. And that was broken on the downside last week. Now, the fact that that's been broken increases the risk that we could see a further flush lower. So at the moment, 95.25 is a level that I'm paying pretty close attention to today. It took a sneak peek beneath it yesterday, but couldn't be sustained that break. But if we manage to go and get a big move beneath that, look for a move potentially to 91.70 or even 88.40. And then I've just indicated there on the chart with that dotted black line, the arrows there. There is not a lot of technical support beneath 88.40. So we're in some pretty interesting territory right now. We've talked about the fundamental picture for iron ore being so bearish for a long period of time, but the price action hasn't stuck up. But well, right now, the price action might start playing ball. So it's a very, very key moment when it comes to iron ore's longer term trajectory, in my opinion.
Scotty, let's round it out with a look at what we're seeing in the local equity market. And look, I mean, we've seen this across the globe, obviously, that V-shaped recovery since the beginning of April. We are actually now reapproaching those all-time highs.
We are, mate. Obviously, it's probably not going to be helped along by what's going on in iron ore, but if you look at the chart there, there's nothing not to like about it at this point in time. Let's not beat around the bush. Everyone looks at the valuation story and can see that it's extremely expensive. The banks in particular just don't kind of reflect reality. But this is what we're dealing with right now. This is what the price action is telling us. The price action is saying right now it's in an ascending channel and it's grinding higher. You look at what's going on with momentum. RSI 14 is now starting to go and flick higher again, albeit very marginally into overbought territory, but not grossly so at this point in time. And we also have MACD about to go and confirm the bullish reacceleration as well. So not only the price action is bullish, but momentum signals are also flicking bullish again at this point in time. So there's every chance we go and revisit those record highs, mate, at 85, 81, potentially as soon as today. We'll see what happens when it comes, of course, with the GDP data out later in the session. But to me, just looking at what the price action is right now, you want to be buying dips. You've got the 200-day moving average trending high. You've got the 50-day moving average trending high, and the price is above both of those. The key thing for investors, though, will be to see how the price interacts with the record highs if and when it gets there. Valuation story, you've got to go and look at fundamentals to a certain degree and say, well, that is clearly a risk. Price to perfection comes to mind when you're looking at what's going on with that skip.
Yeah, it's interesting, isn't it, Scutty? Because last month, I guess the question was, were we seeing a bear market rally or was this another bull market? It appears to be the latter case then.
It does. And look, I was flipping and flopping when it came to potentially what I like. I don't like how it was just this V-shaped recovery and there's been no major pullback. But the price actions just keep me in the game. Like, if it was just purely my fundamental view, I'd be looking to go and sell at every opportunity right now. But looking at the price action is telling me the polar opposite. So I've got to check my ego in place and say, well, at the moment, whilst I think it looks ridiculously overvalued, the rest of the market doesn't. And until that actually comes to fruition, well, you've got to go and respect what the market is thinking. So for the time being, it's grinding high and likely a test of those record highs.
Scotty, great to get across what you're seeing on the charts. Thanks for joining us on StoneX.
Always great to be here, mate. Take care.
The trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.